In 2019, Bangladesh's real GDP growth rate was roughly 8% and India's real GDP growth rate was only 4%. By 2020, Bangladesh overtook India in terms of per capita GDP, which simply meant that an average Bangladeshi was richer than an average Indian. On top of this, if you align the fact that the labor force participation of females in Bangladesh is roughly 40% and in India it is almost half, which is around 20%, then that again presents Bangladesh's economy in a very positive light. But despite all these positives, right now Bangladesh is availing a loan from IMF. Why is that the case, and is Bangladesh going to become the next Sri Lanka, will be the focus of our discussion on today's video. We will understand three key central points. Number one, what is exactly happening in Bangladesh? Number two, what is exactly happening in South Asia right now, that countries like Sri Lanka, Pakistan have almost gone bankrupt. Bangladesh again is reaching out to IMF. Is similar situation going to happen in India, or is it not going to happen in India? And finally, we will understand that what are the pros and cons of the Indian economy right now. Will it grow from this point? Will it not grow from this point? That is the precise discussion that we are going to have. So let us set some context as to what is exactly happening in Bangladesh. Now, a large part of Bangladeshi economy depends on the export of garment, and in fact, it is the second largest garment producer of the world. A lot of garment manufacturing happens in Bangladesh, and that is one of the reasons why we see very high female workforce participation in Bangladesh. And whatever garments are produced in Bangladesh, a large chunk of it is sent to Western economies where the cost of production of garment is fairly high. So as you can imagine, from 2020 onwards, the situation has not been good. The inflation is rising, especially in America, especially in Europe, which are one of the biggest consumers of the export of garments which comes from Bangladesh. Now, with the latest supply chain disruption that happened due to Russia-Ukraine war and a lot of foreign investors pulling their money out of South Asia, so South Asia comprises of India and some of the other neighboring countries, what has ended up happening are two specific points. One is that the inflation across developed countries has increased. For example, you might have seen that the inflation in the US is touching almost 9.5%. In UK, it is touching almost 10%. So this is impacting the demand of goods from Bangladesh. That's point one. Point two is the risk profile of South Asian countries has gone up, which is reflected into the cost of capital. So cost of capital in very easy to understand terms means that at what rate the entrepreneurs are getting capital to set up their businesses, start new ventures, etc. etc. So from that particular perspective, given the fact that all these emerging economies, India included, our cost of capital has gone up. Why? Because of the supply chain disruption, a lot of investors want to move to slightly more stable economies. So in this entire game, a fast growth economy like Bangladesh has started to suffer a lot. Not only has trade deficit increased, even the inflation in Bangladesh has increased quite a bit. So let us look at some data as to whether or not Bangladesh will become the next Sri Lanka. Is the situation really bad there? Something similar to Pakistan or Sri Lanka? Let me show you some data around it. Now, the first data point is regarding the forex, and if you have been reading Indian newspaper, you would have again read the term that India's forex is also shrinking. So something similar is happening in Bangladesh too. Is that situation alarming? The answer is yes and no. It is alarming because of the fact that they can only buy stuff that they are importing for the next 4 months only if they depend completely on their forex reserve. So this is a slightly alarming situation. What is the situation in India? That we have forex reserves which are good enough for us to survive for the next 10 months at least. So we have a longer buffer compared to a country like Bangladesh. Sri Lanka has already gone bankrupt and Pakistan is also on the verge of bankruptcy. The second key point that you need to know about Bangladesh's economy is that similar to India, they are an energy hungry country, and in order to meet their energy needs, for example, in terms of scaling up enterprises, in terms of electricity needs, etc., they import a lot of energy in the form of oil or gas. Now, due to Russia-Ukraine crisis, their energy inflation in the country has gone up, and the projections are there that up until 2026, there will be a lot of power cuts in Bangladesh. Now, the third key point about Bangladesh is that they are very prone to climatic changes. They are one of the most impacted countries that will suffer the bad side of the climate change simply because it's a low-lying country. You might have heard of Sundarbans. Tell me in the comment box where Sundarbans are in India also. And even that region in India is going to suffer due to climatic changes as the water level rises. That is going to create geographical impact and will impact the livelihood of the people living in that area. And it is estimated that approximately 15% of the Bangladeshis will suffer direct impact of climate change due to increasing water levels. Now, as a result of all these factors, what is happening in Bangladesh is that Bangladesh has approached IMF for taking a loan. They have not disclosed the amount of loan that they are going to take, but they are going to take a loan as a preemptive measure. So preemptive measure means that, for example, if you don't want to have heart diseases or diabetes, then what would you do preemptively? You would go exercise daily, eat the right kind of food, etc., etc. That is called as preventive or preemptive measure. But once diabetes happens, you have to cure it. So diabetes or some kind of health problem in the economy has already happened in Sri Lanka and Pakistan, and they are on the verge of going bankrupt. But Bangladesh has been sensible, so to say, in terms of taking some preemptive steps and putting in some precautions, and taking this IMF loan is one part of that story. Now let me present some very interesting data comparing countries like India, Pakistan, Bangladesh, Sri Lanka's economy, and what exactly is going right for India and not going right for countries like Sri Lanka, or even to a certain degree for a country like Bangladesh. Just to set some context here, here's a graphic which will outline the fact that Sri Lanka's per capita GDP is almost 2 times that of India. What does that mean? That an average Sri Lankan is 2 times richer than an average Indian. But despite that, India is the one that is giving $2 billion of foreign aid to Sri Lanka to help them overcome the crisis that they are currently in. Why is that the case? This following data will help you make a little bit of sense. Now there are 4 specific data points that you should look at. First and foremost, you need to understand the strength of every economy. For example, when it comes to India, the strength of the economy is the productive workforce, where we are growing, the strength of foreign relations, the type of politics that exists, the level of corruption that exists. So compared to other South Asian countries, the overall macro indicators for India is much more positive. For example, let me show you the corruption rank of India, and here look at the improvement of the things. For example, you can clearly see that back around 2014, 2013, our rank was around 94. Then over time it has improved. Now we are at 85th, which is a progress, so to say. On the flip side, here is the data for Sri Lanka, and you can clearly see that its ranking was getting worse when it came to corruption index, up until the point it absolutely went bankrupt. Now the second data point could be the forex reserve point. I had made a separate video on this topic altogether when there was a lot of noise that, hey, India's forex reserves are going down, etc., etc. Is that a sign to worry? The answer is no, because India has managed its forex reserve well. India has actually allowed the rupee to slip. Yes, it hurts a lot of people, but just the depreciation of rupee does not make the nation bankrupt, because at that stage, if your rupee is getting weakened, it can lead to more foreign investments. Why is that the case? Because Indian market becomes slightly inexpensive for foreign investors. Similarly, a lot of exporters of Indian goods, they will benefit if Indian rupee is falling. Now, the biggest indicator of all this is the number of months of forex reserve that we are left with, because it allows RBI to sell or buy US dollar to manage a certain level of INR as per internal dynamics of the country. So from that particular perspective, RBI has said that they have roughly 10 months of forex reserve with them. There is nothing to worry about from that perspective. In Bangladesh, it is close to 4 months. In Pakistan, it is close to 4 to 5 weeks now. Now, third and a very critical point between India and other South Asian countries is the fact that India's export is very, very diverse. For example, here is a breakup of what we are exporting in what percentage amount. So you can categorically see that when it comes to petrochemical processed goods, we are exporting approximately 14%. When it comes to pearls, precious stones, metals, we are exporting approximately 10%. And similarly, you can see the small breakup. But when it comes to some of the other South Asian countries, for example, let's pick Bangladesh, here is their breakup of export, which is very worrying. For example, almost 83% of their export is into clothing. Now, what has happened is that as the inflation in the Western countries has gone up, the demand for clothing, even from Bangladesh, has gone down, because people just do not have the same level of demand as there was previously. Will this situation improve going forward? Hopefully it will, but to cut the long story short, Bangladesh is overexposed to one type of export only, while India is very well diversified. Same was the problem with Sri Lanka's economy. Here is my entire video on Sri Lanka's bankruptcy. You can go and check it out. But again, in Sri Lanka's case, they did not diversify their export. In India's case, one of its primary strengths is that it has been able to successfully diversify its exports. On top of that, we bring in a lot of foreign capital to India through our service export industry. For example, when it comes to IT sector exports, India is bringing in a lot of foreign capital. So which brings us to the final point, that if you aggregate the first 3 points that I have spoken about, it leads to a lot of foreign investor confidence in a country like India. Because think about it this way, that there is a lot of crisis that is going on in the South China Sea, where China is fighting with a lot of developing nations like Taiwan and whatnot. In South Asia, economies are crumbling. Japan is not growing because of the age problem there. So the point is that there are very few countries left in the world right now where growth can be accelerated. And India, due due to its demographic dividend, given the fact that we have young, inexpensive labor, the politics look stable. I'm not trying to praise the government or criticize the government. I'm simply saying that the politics look stable. So all these little points generate a lot of investor confidence. Whenever foreign investors are investing in any country or putting in their money, their goal is to make money. And for that, their number one factor becomes that how responsible a country is in terms of taking debt from different parties. Now, let me take you through some history, and a big shout out to the print and Shekhar Gupta ji for providing these graphics. So I will use it directly from there. And these graphics talk about how much loans and how many times different countries have taken loans from IMF. So let me show you 2-3 data points here. And here is the loan history of Pakistan. And you can see that on your screen, that in 62-63 years of their existence, they have gone to IMF roughly 22 times, which is almost once every 3 years. This does not generate any confidence when it comes to foreign investments in a country like Pakistan. Now, if we go to Sri Lanka, if we look at their 57-year history, then they have taken IMF loans 15 times. Again, not as worse as Pakistan, but still worse. And in fact, Sri Lanka was on the right track when it came to economic development, but the Rajapaksa government, due to excessive corruption in the economy, it really derailed the Sri Lankan economy, and people are paying very, very dearly for it. Then comes Bangladesh, that in their 58-year history of existence, they have taken loans 10 times, which is still somewhat reasonable. And finally, we have India, which took its last IMF loan back in 1991. After that, the economy got opened up. And since then, we have been strengthening our economy, and we have strengthened our economy to such an extent that now we are giving aid to countries like Sri Lanka, which are on the verge of bankruptcy. So rather than seeking loan, we are actually giving humanitarian aid to support our neighbors. So this has been a great development, and there are 5 specific reasons why this has happened. So let me quickly summarize what India has done right and where are more opportunities where we could improve. So 5 key things where we seem to be on the right track. Number 1 is controlling the corruption problem. This used to be a very talked about topic, but it is great to see that we are making positive progress here. Number 2 comes forex management. That right now also, despite high inflation, despite emerging economies getting crushed and a lot of negative things, India's forex reserve can still pay our bills for 10 months, which is a good enough buffer period. So forex management has been done really well. Yes, Indian rupee has fallen unfortunately. Will it recover? Will it not recover? I don't know, but at least from a macroeconomic perspective, it's not as if that India's economy is fragile. Then comes point number 3, that the diversification of export has been done really well. There seems to be no problem. Similarly, our ability to attract foreign investors, it is growing with time, and given the fact that there are very few limited choices, this is going to help a country like India to grow further from this point. 5th and finally, it is good to see that our country is rewarding capitalism. Yes, there are 100 different problems, that conglomerates are taking cheaper loan, politicians are making freebie announcements, I get it. But the point is that we are moving from a socialist structure to a slightly more capitalist structure, which is very good for a country like India, which requires excessive generation of wealth. Which brings me to the problems, and there are 2 problems that I will speak about. The first key problem is, so the competition that we are considering right now, it is weak, right? So for example, if we are comparing our economy to Bangladesh, Sri Lanka, Pakistan, that is not the objective with which we should think. So if we are trying to compete against, let's say, China or US, then we need to make slightly more riskier moves, go to industries where a lot of wealth can be generated that will truly make Indians rich. And for that, we need to go to high-end industries. We at least need to focus a lot on service sector. But right now, our focus seems to be too much on manufacturing, which might not generate results fast enough for us in order to compete with countries like China and the US when it comes to wealth generation. The second key problem that I see right now is the over-imposition of tax. Every single tax in India is going up, and unfortunately, I feel that a lot of tax will continue to go up. Now, this is creating a very negative environment, especially for high net worth individuals, and a lot of high net worth individuals are leaving India. This space will only go up because with time, it is becoming easier and easier for a lot of rich Indians to migrate to other countries. A lot of other countries, for example, Estonia, Portugal, they are opening up their borders for rich people. They have no problem in terms of embracing these people. Even Middle East countries are welcoming a lot of rich Indians. So yeah, this is an area where we definitely need to take a look at, and the tax structures will get hopefully redesigned quickly, because it is very important to keep people intact who are actually generating wealth for a country like India. I hope you enjoyed this case study. Please press the like button, and I will see you soon.